candles lies in the fading strength of buyers. Smaller candle bodies reflect weakening bullish momentum, indicating a reduced ability to push price forward. This serves as a subtle early warning that the bulls are losing grip, and a potential reversal could occur near that level. For better accuracy, this signal should ideally align with another reversal indication, like a doji or a candle showing a long upper wick rejection at the end. Keep in mind, this logic applies similarly in a bearish context as well. The momentum candlestick setup involves two back-to-back candles where the second one has a larger body than the first. This formation highlights strong momentum entering the market, hinting at a possible continuation in the same direction. It's important to note that the pattern is more reliable when the larger candle closes without an upper wick, which suggests buyers maintained control until the very end of that candle's life. Always view this as a stronger setup when it aligns with the prevailing market trend. Looking at the GBP 1 Japanese yen hour chart, we can clearly spot these momentum candlestick patterns. Observe how the price continues to climb after each of these formations appears. While this alone shouldn't be the basis for trade execution, combining it with other strategies can support smarter and more strategic trading decisions. 6. Rising and falling wedge patterns. A wedge is essentially a consolidation phase where price moves within a tightening structure marked by two converging trend lines. It reflects a temporary indecision in the market where buyers and sellers are both battling for control. The breakout direction from this structure helps us identify who's taken over, bulls or bears. When a falling wedge breaks to the upside during an uptrend, it's often a continuation signal. On the flip side, a rising wedge breaking down during a downtrend suggests bearish continuation. But here's the challenge: fake-outs are common. So, when should we enter? Here's how we approach this setup in a bullish scenario. First, wait for a break and close above the falling trend line and the last significant market structure. This double confirmation tells us that buyers have enough strength to push forward. Next, watch for price action signals near the breakout zone, like rejection wicks or reversal candles, to time your buy entry. Checkmark example: on the gold 1H chart, the higher time frame is clearly bearish. We see a wedge formation, a sign of consolidation. Then price breaks below both the wedge and previous support, confirming bearish control. Now, apply the Fibonacci tool and mark your sell order at the 0.618 retracement for a high probability entry. Another case is seen on the Bitcoin 1H chart, with a clean downtrend followed by a consolidation phase. Zooming into the 15-minute chart reveals a rising wedge. A breakout to the downside signals that sellers are back in charge, aligning with the broader bearish bias. 7. Combining high-quality confluences. The most reliable trades are those backed by multiple layers of confirmation. Let's dissect an ideal example where several technical elements align, creating a high-conviction opportunity. Brain price action breakdown. Clear downtrend. The market is consistently printing lower highs and lower lows, so we want to stick with the dominant momentum. Key structure level. A well-tested support, resistance zone that has rejected price multiple times. Respected trend line. Several touch points reinforcing the trend line as valid. Shrinking candle bodies. A loss of bullish momentum as price approaches resistance. Double top formation. A textbook reversal signal suggesting exhaustion. Long wick rejection. Candlesticks with long upper wicks right at the confluence area indicate strong selling interest. Bearish engulfing candle. A strong momentum candle showing that sellers have stepped in aggressively. Clipboard all signs point to a high-quality short setup. When you get this kind of layered confirmation, trend, structure, patterns, and candlestick behavior, it's a solid 5-star trade. The key takeaway: don't chase every pattern. Build the discipline to wait for high-quality setups and skip the weak ones. Final note: if you found this breakdown valuable, go ahead and hit that like button. It really helps. And if you're new here, don't forget to subscribe for more price action tips and strategy breakdowns. See you in the next one.